Hello, Warriors. Monday morning. Let's have a great week. You should be ready to pull the trigger if you did your work over the weekend. Let's start off with this gold-silver ratio, which is very important to precious metal bulls. I talked about that if we got back under this moving average around the 82.30 level would negate the breakout. If you're a precious metal bull, specifically a silver bull, you want to see this gold silver ratio trending down, breaking back down, and it's being certainly exemplified in price today when you see silver up 32 cents, 40 cents now. And you look at this chart on the silver, we attacked last week's highs, and then you compare it to the gold, which didn't get close to last week's highs. In fact, this was our last buy point here, and I actually, except for some shares, missed the silver price down here because I was looking for 21.10. And gold, I have to be open to the possibility that going into the Fed, we have some very important, both on the material plane with the Fed next week, and then on the cosmic plane, the end of spring, the beginning of summer, the solstice could bring in reversals. Very possible that we get one more pop in the dollar, not to new highs. The way gold is acting, it wouldn't really surprise me if we still traded back under this low one more time. I'm not shorting it. I, called the bottom all the way back here in May, and then this pullback last week went to the area for the next wave. So if there's an interruption in the process of this bull move in gold, I'm willing to accumulate more down here. The silver, if that happens and we get some type of important strong dollar move, especially with the yen, which I think is on the verge of making new highs up here. It is. We're not that far away from the highs that were made over a month ago, right up here. As you can tell on a lot of time frames, it may not confirm. It won't on the daily, probably does on the 4 hour. It really, even the short-term stuff is, there'll be some divergence in the 2 hour, up around 132, I think is the next target. And what's going to be interesting about the yen is what do yields do? And also we have the ECB, so we have a lot of things going on this week. So what will yields do? Yields are popping with the yen right now, and we could have a little 3 drive. This is a 2 hour chart, and I think that the yields might have some trouble up here at this 3%. Are they going to take out the 320 level up here? Doesn't seem to have the same energy as the yen. So I'll be looking for a yen scalp. But then you ask yourself, what's a better short? The yen at new highs at 132, or the Dixie, say it rallies back to, 103.5, 104. Do you sell a market at new highs with divergence, or do you sell a failing rally, which I believe the dollar is going to be? So you'd rather short the relative weakness. The relative weakness is, I still believe, the dollar compared to the yen. So the answer is I'll do both. Anyway, if you're more conservative, really the smart thing to do is sell the weakness, 103.50 up here. Perhaps it happens this week after the ECB. I'm still not going to chase euro up here. I put the fibs in. Last week we held the 38% level. After the ECB, maybe we'll see halfway back, maybe even 61.8 back. This is where I'd be a buyer. And that's where I think the Dixie will be 103.5 or more on this type of break if we're 61.8 back. So euro, again, just like last week, and actually did call a short up here at 80. And it just was a 150 pip move. Let's see if we get some type of fib extension of it. And that's what I'm looking for. Aussie still the strength over euro at least, and had a nice little short in Aussie that worked from up here. And are we going to just bolt to new highs? I don't think so. I think you could probably sell a rally in Aussie. It's not really not doing that much with a shade of a weaker dollar and the metals being up, so maybe around 72 and a half, 72.60. I still think we could trade down to 71. But here again, we have another central bank. We have the RBA. I really don't like to position myself in front of central bank action. So, I'm not going to be positioned on the day of the ECB or on the day of the RBA. So I'm just giving you direction as to what I would do should those markets be there after the announcement or during the presser. Moving on to, again, silver. Perhaps we are going to peak up here, but this is a great tell for a bear market in bull market in the silver, bear market in the dollar. I don't think you're going to have a bull market in silver unless we have a bear market in the dollar. So these two are, if you look at historical charts, and I also interview people. Have a great interview this Thursday with Gareth Soloway at In the Money Stocks on Thursday. Be a little different time. He's busy in the morning, so it'll be noon Eastern time for Gareth. But when you look at trades like this, you just have to be patient. I know a lot of people are asking the big question, and here's the big question in the S&Ps. What comes first, taking out 3,800 or going to 43.44? I could answer that with one qualification. See this line that I had for the 4,100 level, how many times it's been a very important pivot. I would say as long as we hold 4,100 on a close, it does open the door for higher levels, possibly even up to 44. So we'll see what happens, but at least you have a frame of reference. And, we could poke through it, see how we poked through it twice last week, but never closed underneath it. Well, this was 98. This was over 41, but closes back under 41 after all the support is held all this time. If that gives way now, you have to just get out of the way. And then you'll be looking to see whether it's a break to buy to correct this, or we're just going to wash out to new lows. My preferred count is higher first, should 4,100 hold. Oil just keeps marching along. We haven't made new highs yet. We should know pretty soon whether or not we're going to have some type of failing rally or blow to new highs. Again, the solstice, this could be a prime candidate. It's WD Gann stuff that markets, whatever direction they're going into the change of seasons, can also mean, and for us to be on the lookout for a change of direction in the market, just like one season comes and goes and they're not the same. They change. There are changes that take place, and in the markets, that's something as well that I pay attention to. I just want to show you a couple of things that really also kind of confirm the strength in the silver shares. I don't know if they're reflecting it much today, but you guys know this is one of the gold shares I'm in. It's a weekly chart, putting in higher lows, up a shade. But last week on Friday, when silver was down, I don't know, 40 cents, the ETF of the juniors was hardly down, SILJ. And then, I watched this one, Endeavor. Endeavor's actually making a new high with silver. I'd love to see a nice pullback, one more pullback with a dollar rally and that. And here's your Fortuna. So maybe there's still a chance of being able to buy a fib retracement down here. So you know, if you see the precious metals break hard one more time, don't think I'm going to be all worried about it. I welcome it. So let it happen. The longer it takes to develop the bigger position, I'll be able to build. Of course, the bigger the hit, I'll take building that bigger position. But when I have conviction about something, I'm willing to do it. Just realize that when you're scaling in or to a position, whether they're shorts or longs, that as you increase it, your risk also does until you have the market moving your way. So as far as I'm concerned, just keep buying breaks in the miners. And I think that's about all I want to cover. You know, I did talk about how Russell was outperforming the other indexes, and today it's not. Today your leader is NASDAQ. Okay, so NASDAQ also looking good. Tip of my hat to Mike, who it'll be 2 weeks ago at the low down here that Mike started putting money to work, and still long. I don't know, I haven't caught up with him. He'll be on in an hour and 20 minutes for an update. I got to pay attention to what Mike's doing here and follow his very disciplined approach of, you know, not only paying attention to the indices, but paying attention to volume leaders, percentage gainers, option flow for market tells. You could learn a lot from Mike. I have, and I hope you're learning a little bit from me. And your long metals making money. You know, we talked about buying the silver, you know, back down here. So this was the day. So I don't care. Come back to 21. I'm a buyer. Break out over this 2.5 level. I think we're going to 3.5 to 4. That's the next hurdle. So I want to wish everyone a great trading week. Good hunting. Mike will be on shortly, and then Mike and I will bat the ball around tomorrow. Same time, same station. If you like what we're doing and we're adding value to what you're doing, spread the word. Join us in TradeGATEHub.com, powered by TradeView Markets. In fact, go ahead and open a demo and check out what TradeView Markets has to offer to you. You'll see that you can trade CFDs, cryptos, FX, stocks, futures, almost everything in your imagination, and very tight spreads. So don't just count your pips on your spreads or in your account, count your blessings. And I'll see everyone tomorrow. Let's see if this dollar rally develops up here towards 103.5. It looks like the yen making new highs and going over 32 is a layup. We'll see if the Dixie could rally up towards 103.5. Well, gold is now lower. Let's see if this black line is a magnet. If it is, you'd still be buying a higher low at 1820 or so. And let's hope gold can drag down silver, so there's another buying opportunity down here at 21. Remember, protect your longs. If you caught this pop in S&Ps, went along with Mike, protect your gains. Never anything wrong with taking partial profits. And no, at least in my view, if we start closing under 4,100, that's the first sign that there's a continuation move to the downside. And that's a wrap for me. Good hunting. See you tomorrow.